3 years of 7% plus. Somya Kanti, starting with you, and this rebasing and the methodological improvements that have been done, what does that tell us about the shape and size of the Indian economy?
Yeah, thank you for having me on the show. I think I'll very quickly mention 4 distinguishing characteristics of the data which has been released. The first, which you rightly mentioned, that last 3 years the average growth rate is 7.3%, 7.2, 7.1, 7.6. So this is actually remarkable. The second thing is that, contrary to the popular perception, this growth is manufacturing driven. Last 3 years, the growth rate of manufacturing has been 11.2, service actually has been around 9% and agricultural 3%. So it's actually contrary to popular perception. The third point is that, who said India is not investing? The investment rate is at 34.5%, savings is at 32.8%. And the fourth thing, I think we are all talking about a decline in nominal GDP. The real GDP, you do know, has been rebased upwards by 100 trillion. The nominal GDP of FY26 is 345 trillion. The real GDP is 323 trillion. And in every year from FY24, the real GDP has gone up by 110 trillion. So we should ask ourselves the question, what is the correct metric? Real GDP or the nominal GDP?
Madan, take that question that Somya Kanti raises and please add to that.
No, I would tend to think that what the government has done is right. You need to make the indices, the series which we're talking of, more contemporary, which is what is being done. And I think the way I look at the numbers is, of course, there are going to be substantial changes in terms of how the numbers looked earlier and what they look now. But I think it sort of vindicates the view we always had that the Indian economy was doing well. So the 7% plus growth is a very positive thing to take from here. But there's obviously going to be a difference between the real and the GDP numbers, because the way in which we calculate GDPs, you get everything in nominal terms. And then you start using the different deflators. Now, the thing is that we're going to have a new WPI also coming up in a couple of months' time. I don't know when it's coming out. So it'll be interesting to see as to how these numbers finally behave, because you're going to deflate certain numbers with CPI, the new CPIs, some are being done with the old WPI. So that could be another thing. But on the whole, I think we'll remain in the same range. We always believed the difference between the new and old numbers would probably be not more than 0.1, 0.2%. And that's what we are seeing.
Ashima, that same point, how do you read these numbers and what does it tell us about the Indian economy?
You know, there was a big controversy about the absence of double deflation and therefore
Yes.
that our growth is illusionary. So I think going through a careful exercise with full double deflation for the manufacturing sector and some extrapolation method for others shows that real GDP has actually increased. You know, so that means that with this more careful estimation that growth is real. The other things I want to flag about the new GDP is that it shows the diversity of the economy. We always thought the economy was services-led. But it shows that manufacturing has been doing well, investment has been doing well, agriculture, that farmer incomes have gone up because of things like PM Kusum and so on, which have given them electricity at cheaper rates. So, and then there's also the issue of low inflation. I must flag that again, real GDP being higher means that inflation is credibly low. And the final, and we can look forward, we should all internalize that inflation is going to be around 4 or below, and we should build our financial, etc., business decisions on that. And finally, that India's data is credible.
Yes.
That there has been a very careful revision. We should have confidence in the data.